Okay, let's grab my mic. Almost forgot to put my mic in front of me. But let's go over this 3,000 pip trade that I took on Tesla and how I was able to get 100% return just about off of entry. I think it was really like 95%, 98% return. And how did I know that it was going to reverse when it did? So as you can see on the 4-hour time frame, I had two crucial areas that were liquidity zones that I was looking for profits. And then I had my second liquidity zone. So Tesla was one of those ones that I was definitely holding for the longer term. I placed this trade back in April. I had been watching Tesla for a year before I even placed the trade. And when I saw price coming down, it was in this descending nature, which meant it was getting there correctively. If you see price coming and it's forming this bit of structure, it is slowing down in nature. Okay, that means it's not getting there. Like this. Okay, that's an impulse. This is getting there correctively. So I noticed that price was getting there correctively. I had it coming down to this low over here, a missed liquidity zone that I often mention. I'm not paying attention to a gap in price. That's pretty much irrelevant. As you can see, you can find 1,001 times when there was a gap in price and then price never came back to fulfill it. Okay. So it's pretty much irrelevant to pay attention to the gap in price. What I was paying attention to was, yes, the gap in price, but the liquidity zone that was down below it. That's what really gave me my idea. So as soon as I saw price come down here, I entered in positions at $144 or $146 a share. Then when price came up, I accidentally deleted that. It pushed up and it started forming its first bit of correction. I immediately bought in again, and then I waited for it to get a little bit lower, and then I bought in again at $172 a share, which it evened out like my buy-in price to like $156 a share after it was all said and done. And even just off of that, like it averaging out at 156, it brought my percentage to like a 77% return on investment across all of my investments, which is pretty solid. However, I saw price as soon as it started pushing up. It pushed up in an upwards trend or bullish for 10 days in a row, 11, 12 days in a row. 12 days in a row it was pushing higher. In all those 12 days, about right here, exactly right there, as soon as it hit my trend line, I almost took my profits. And let me tell you why. As soon as it hit trend, my instinct was to close because I was like, oh, well, what if it reverses? Okay, I'm human. Of course I'm going to have these thoughts when it comes to the market. But what I remembered is from a book called Market Wizards. One of the guys on there always talks about wait for the market to tell you what it wants to do. Okay? Don't try and predict. Don't try and force your opinion onto the market, because the market's going to do what the market's going to do. Okay? So we have to do as a trader in this situation is wait for the market to provide us with the information that it wants to turn around. And I'm glad I did, because it went all the way up to my second take profit, which was $270 a share, and then immediately turned around and I sold off right here. I sold my shares. I missed it at 270 a share. I should have had it set, so it took me out. But I sold my shares at $265 a share. Made close to 100% gain off of Tesla. And if you look over here, we'll look at the proof on these, which is this trade was 1,193 points. This second trade was 866 points or pips. And then my third execution was 910 pips off of Tesla. And as soon as it got up here, I knew it was going to reverse. The broker that I wanted to short the market with didn't allow me to enter positions. They didn't offer Tesla on two of the brokers that I have. So I kind of missed out on the sell of Tesla. Or else this would have been a great shorting opportunity. And we could have looked for a short down below this. And I would still be holding the short. I wouldn't have closed for a 30 pip stop loss. So you're risking 30 points, and currently the market's running 200. And that was the first take profit. I would have just sold right there at 200 points in the market. So this is how I would have sold Tesla. This is how I knew to sell Tesla, is I found my liquidity zones over here on the far left. And as soon as it hit those, I'm out of the market. I made my money. I had a great percentage return on the year. And you got to look at this thing correctly, okay? Most of your institutions, like your Vanguards or your Black Rocks, I think theirs is like iMarkets or something like that. Or your trying to think of another company that is a big, they hold 401ks, etc. Their goal at the end of the year for you when you invest with them is to get you back like 15% return. Okay. That's what you know of, at least. They get you back 10 to 15% return on your money from what you invest. So if you can learn how to read charts, especially like technical analysis, and fundamentals aren't important. Like this whole thing on Tesla, I didn't even know what was going on. I don't know about any of the news. I didn't look at it. I don't care to look at it. I'm looking strictly at what price is willing to tell me. Okay. And if I'm willing to pay attention to price and what it's willing to tell me, I can now take an educated guess, safely put my money into something where I'm not afraid of like, is it going to turn around? Is it not? You're parking your money somewhere with an educated guess, with a parameter of what you're willing to risk on the table. Okay. And you just wait. And that's exactly what happened with Tesla. And I netted back almost again like 100% off of all three of them. So doubling, my money on what I put in, which is crazy. And if I'm getting back 100% a year, and then you have companies like BlackRock, Vanguard, etc., who are only offering you 15% a year return on your money, you can now start to see like why learning a skill set like this is important. Because yeah, Tesla's one example, but I had been watching Tesla for over a year now. Yes, a year. But was it not worth the wait and having the skill set to be able to participate in a market where you can net a return of almost 100% of your money? That would take you 15, 30, 45, I'm thinking like 6 or 7 years. This is just a ballpark figure, like 6 or 7 years for you to get your money back from a company like BlackRock or Vanguard, when you could have, in those 6 or 7 years, really a year or 2 years, learned a skill set that you can actually reprice, learn how to look at a chart, take an educated, well-rounded guess, and then participate in the market to then 100x your return. Learn the skill set. Put yourself in the position to where you can make your money. And even just off of this, guys, this was a 6-to-1 trade. Most people were entering a trade for a 1-to-2. And really, I'm talking like, if you're using proper risk, you're entering a trade at a 1-to-2. Most people are entering a trade at like a 3-to-1. So they're risking 3 times the amount to get back 1 times the amount. So they're putting their capital at risk to make a small fraction of return. And this was a 6-to-1 trade. I'm sorry, I'm said it backwards. This is a 6-to-1 trade, meaning I got back 6 times what I put in. I risked 1%, I got back 6% basically. So risked 30 points and got back 200 points. You do the math. And if you're doing, say, a 1 standard, you're risking a 1 lot on that. Or even if you're just risking 10 cent, if you're risking 10 cent, that's $1 per point. That's $200 just off of this sell from Tesla. If you're risking a 1 standard, a 1 lot, which is what we trade at, you're getting back $2,000 and you risk $300. How many times would you have to lose that $300 for it to equate to the 1 win that you get off of Tesla? Proper risk management, having the skill set, and I mean, other than that, that's about it. And yeah, psychology is important. 1,000,000%. That's one thing that we focused on heavily, was psychology. So learn the skill set, get around people that know how to look at a chart, that know how to read a chart, that can understand the information that this chart is providing. But yeah, I hope you enjoyed this breakdown of Tesla. And if so, I will catch you next time. And if you want me to discuss anything on this, please leave a comment. Let me know what you would like me to go further in depth in. And I got you. I'm not going to rip your soul out. None of that. You know what I mean? I'm here to help. So I hope this comes through. And I will catch you next stream. Peace.